Hi guys, in today's session it's going to be a little bit different to what we normally do. Before we get started, I want to let you know that this is sponsored by the Property Investor app, which is the UK's first property investment platform, which showcases all kinds of deals all over the UK. Whether you're looking for that below market value deal, that rent to rent deal, that lease option deal, we've got them all there now. There are two ways to get involved. You can either go to the website, which is propertyinvestorapp.co.uk, or if you've got a smartphone, go to the App Store, type in Property Investor and download it from there. Now in today's session, it's going to be short and sharp. Now today's session is all about balancing the books. Now, it's going to be a bit strange as to what I say because some of you will agree with me and others may not. But it's okay because everyone's got a different opinion. So I got asked a question a couple of weeks ago about where should they buy property? Should they buy up north? Should they buy it down south? Because they had the capital and they wasn't too sure about taking a property up north because they wanted to be able to touch and feel it. And they weren't too sure about buying a property down south because they were worried about cash flow. Now, my advice to anyone that asks this question is very simple. What do you want to achieve from the property? Because if you want to achieve cash flow, you're not going to be able to get that from investing down south. You may need to go up north, which means that you then have to be comfortable with investing further away than what you're probably used to. If you're looking to invest in a property and you don't mind it not cash flowing, but you want to put some money away as almost like a nest egg, and you want to work for the long-term goal, which is capital appreciation, then absolutely you invest down south. Now, I'm a big believer that there's nothing wrong in either of those strategies. Now, again, it all depends on where you are in your property journey. But one thing I would say to you is that there's nothing wrong with having a mix of the two. So if you need the cash flow to get you started from the outset, you could start investing in smaller units up north, which are a lot less expensive. And as a result, if you're taking a mortgage, just giving you round numbers, let's say a house in Liverpool may cost 100,000, where a house in Milton Keynes may cost 300,000. So you've got to look at it from a point of view. How many houses can you get up north? How much further is your money working for you? Because let's face it, if that house in Liverpool is renting out for, let's say, £500-600 a month, whereas a house in Milton Keynes is rented out for £900 a month, for the same amount of money, you can actually buy 3 houses in Liverpool as opposed to the one in Milton Keynes, and you can have almost like double the income because 900 versus 3 times 600. But over a period of time, you may get sick of buying, let's call it cheaper stock. Let's call it less desirable stock. And I say less desirable because it is up north and you may have to lose an element of control. But there's nothing stopping you from later on purchasing other stock. So down south. So again, going back towards Oxford, Milton Keynes. So I always consider it as south of Birmingham. So if you want to invest in north, really you've got to be looking north of Stoke-on-Trent. If you want to be investing in south, you want to be looking at south of Birmingham for capital appreciation. So south of Birmingham, you've got Coventry, you then head towards Northampton, Milton Keynes, and then you head towards London. So that's the kind of region that I look at when you're looking at capital appreciation. If you're looking at north, you then start looking at places like Stoke-on-Trent. You then start heading up towards parts of areas of Manchester, even though Manchester is still quite expensive. You then start looking at Liverpool, and then you can go further up north. You can head towards Hull, you can head towards Newcastle, Stockton-on-Tees, County Durham, Stockton-on-Tees, really cheap areas where you can still pick up houses for circa less than £40,000. And purchasing properties below £40,000, remember, you still don't have to pay stamp duty on that, even if it is an investment property, because properties under £40,000 are exempt of stamp duty, for those that didn't know that. So there are ways that you can purchase, and I've done this myself previously, where I've purchased properties up north, but you've got to be comfortable with that because you've got to be able to have a good power team in place. And you've got to also remember, because the houses are cheaper and the rental income isn't as high, when something goes wrong, chances are is that it could wipe out the cash flow for quite a few months. So that's something to take into consideration. Now, going back to the point, is it good to have properties up north? Is it good to have properties down south? Now, I consider it as a cash flow portfolio and a capital appreciation portfolio. And it's good to have a mixture of both, because although it's great to have cash flow and that will serve your purpose now, later on down the line, when you're potentially looking to cash out, those properties that you purchased let's say 10 years ago, they may not have appreciated in capital value a great deal. They may have gone up a few percent, whereas the stock down south, if you buy the right kind of stock, would have increased significantly. So not only are you making cash flow from the stuff up north that's serving you now, but you'll also have a nest egg. And I appreciate that some people will think, well, in actual fact, why would I consider putting money down south? Well, I can still continue to pump that money up north and still generate even further cash flow. Now, remember what I said at the start. There's no right or wrong for this answer. All comes down to you and your personal circumstances and also your investing preferences. So it's just something to take into consideration there. Personally, I like a mix. And if you look at my portfolio as a whole, I've got single lets, I've got HMOs, I've got blocks of apartments, I've got service accommodation, I've got commercial property, I've got some land, I've got industrial. So I've tried to mix it. And again, now I've got investments all over when I say all over the country, I've got lots of stock in the Midlands. I've got stock down towards Cornwall. I've now got some stock towards North. I've got some stuff in Manchester. I've got some stuff in Liverpool. I've now got some stuff in Blackpool. Blackpool, questionable whether it's a desirable area or not. Well, time will tell. So there we have it, guys. Hopefully you've enjoyed just short, sharp, just almost like a mind dump. Someone asked me the question, should I invest up north? Should I invest down south? And that's my kind of thoughts on it. So as I said at the start, this is sponsored by the Property Investor app, which is the UK's first property investment platform, which showcases all kinds of deals all over the UK. Go and check us out. You can either go to a website, which is propertyinvestораpp.co.uk, or if you've got a smartphone, go to the App Store, type in Property Investor and download it from there. Don't forget to subscribe and hit the notification bell. And if you want to connect with me on social media, please feel free to do so. Find me on Facebook, LinkedIn, Instagram, Twitter, Clubhouse, as well as TikTok. It'd be great to hear from you. Please feel free to go and leave me a question at my website or on my website, which is www.arshilahi.com/ask Arsh. I really hope you've enjoyed it, and I look forward to speaking to you soon and also looking out for your questions. Take care. Bye-bye.